So I believe that you guys should be able to see my screen. So I am basically just waiting for the green light. And whenever FX Street support, you say all good, ready to go, then we just begin. Wonderful. Thank you so much. Welcome to the session, everybody. Today is March 9, 2020, and we are gathering all together here in the FX Street Education Room to talk about stock trading. Today we're going to enjoy our time with Jeff Sonnier, who is going to be leading the session in the world of stock trading, as I just said, and more specifically, the style of trading that we're going to implement on those stocks is swing trading. Now, be open-minded. By the way, I didn't introduce myself. I just went straight into the purpose for the session. My name is Jose Blasco. Sorry for that. But as I was saying, be open-minded because during the session, even though we will be targeting stocks as the key asset for today's session, everything that we do in the FX Street Education program is all multiple asset classes by nature. So Jeff may refer at times to the options markets, to what happened last night in crude oil, which is a commodity. So be open-minded in the sense that even though we are going to be focusing on stock trading, we will be ready to explore the markets from the way it should be done, which is to understand all the different assets available. Anyway, a couple more things before we start. Very important for you to make a note of the email address on the bottom right of your screen, educationsupport@fxtrade.com. That email address is for you to use for whenever you have a question, either related to the program itself, the FX Trade Education program, or if you may have questions concerning the skill of trading, if you wish, meaning that maybe you're watching this session recorded, you are listening to what Jeff has just explained for you, but now you have a question about it, so you may have questions, then you can either email Jeff or email education support and get your answers this way. So please make sure you communicate with us so we can help you efficiently and on time. And finally, one more thing I would like to say as well is that in the end, no matter what we do in trading, there is a moment in time where we end up, all of us end up with a chart in front of us, analyzing the market and planning a trade. And planning that trade and that execution always imply the plotting or the identification on the chart of what we call price zones or price ranges, buy zones, sell zones, etc., etc. So bear with your instructors for sure. Depending on when you started attending our lessons, you may start experiencing working with new instructors for you. Maybe you were already attending sessions last week, so you get to know already how basically how we work and how we trade. But bottom line, listen carefully because all instructors will be working on those trading zones, sharing insights, very powerful insights on how they come up with such trading zones, and they will help you to improve your trading and support you in everything else, you know, especially if you are a student coming from OTA, which you are used already to use price zones on the chart, but we want to help you go to the next level with a proper and very advanced understanding of those zones, okay? Anyway, last thing, disclaimer. This is obviously a financial presentation, so we have a legal disclaimer here. I'll read it quickly and we begin. Disclaimer, Forex Trade SLU provides generic information to its subscribers and it is strongly advised that the client should consult with a financial advisor before proceeding to trade. While the information posted is believed to come from reliable sources, the company does not guarantee the accuracy, correctness, or completeness of information available from its service and therefore will not be liable for any loss incurred. FX Trade does not provide any investment advice, nor provide any personalized investment recommendation, and nor advice in making a decision to trade. No guarantee is made that any user of the service will or is likely to achieve the results advised by the webinar examples. There is often a large difference between the theoretical performance and the actual results later reached by any trading platform. There are many influencing factors related to either the market in general or to the specific implementation of any information which can affect actual trading buy and sell results. So before you start trading, please make sure that you have considered your entire financial situation, including financial commitments, and that you understand that trading is highly speculative and that you could sustain significant losses. Bottom line, this is a legal paragraph, which is certainly critical, but bottom line, what we're asking you, please, is to be serious in your approach to trading like we are ourselves. Jeff will be looking at the markets, he will be identifying potential opportunities, even planning them all the way so they are ready to be executed. But if you were to execute those trades in your accounts, of course, we expect you to have your own rules of risk management, your own discipline, your professional approach to trading, and that you respect all of it. If you happen to be a student in learning stages and you may say, wait a minute, I don't have rules for risk management yet because I don't know how to do it. And this is just an example. So please communicate with us, educationsupport@fxtrade.com, and phrase what your needs are, so we can certainly customize the lecture sessions that we do normally over the weekends, and go ahead and help you to basically come up with a few more pieces for the puzzle, and have your complete puzzle when you start trading, and that way you can trade in a proper manner instead of using an incomplete plan or an incomplete understanding of how the markets work. Okay, so count on us for all that support, and eager to pass the screen and the microphone control to Jeff so he can begin the session. So here we go. I am now sharing the control with you, Jeff. The class is yours. The students are yours. Thank you so much.
Okay, thank you. Thank you so much, Jose. Good morning, traders. Well, it looks like last night the bottom fell out, and they went ahead and implemented their price control so that nobody can go ahead and short the market anymore. We're not here to talk about what's happening in the futures market. Let's go ahead and focus on the stock market. And although the futures market last night will have a huge impact on where stocks open today, we're going to be focused on what we can do from a stock market perspective, and see if we can find any trades that could let us make some money going forward. You'll notice my screen here, I've got lots of time frames on here. When I'm trading stocks, however, I typically go for the daily chart, the daily and the weekly. And I've drawn some zones here on Apple. Before we get into the stocks and where we can identify some zones for some possible trades, I want to go over the advantages and disadvantages of owning stock, because there are some. First of all, the advantages: whenever you purchase at least one share of stock, you are part owner of the company. And as a part owner, you have some rights and privileges in that particular company. As a part owner, you have the rights for voting. You can vote on the specific items that the quarterly meetings have, the yearly meetings. They typically introduce new things that the company wants to do, and you have that right to go ahead and vote yes or no. In addition to voting rights, you have dividend that are paid on a regular basis. Not every single stock will pay out a dividend. Some stocks are out there are called growth stocks, and those are just, you're going to get your increase in the price of the share just based upon how well the company is doing. They don't pay out a dividend. And some stocks are extremely expensive, and some stocks are not that expensive. And I can show you some examples of both of those. So what are the disadvantages of purchasing stock? Well, like any investment, stocks can go up, the price can go up, or the price can go down. It all depends on what the company is doing from an investment perspective. So if they are making poor decisions, in the case of management, the share price is not going to reflect that attitude of the management team if they're making decisions that are maybe short-sighted, or that are detrimental to the company. There are some CEOs out there, and I'm thinking of one example in my head. Everybody remembers Sears and how that stock has tanked, and the company has basically, if it's not in receivership, it should be. The only part of that company that was doing well was their financial arm. And from my perspective, the CEO did that on purpose. He didn't care about the way that Sears was operating. He had no intention to try to save the company. He was only interested in their financial arm, because that's the part of the company that was making money. So all of his resources and ideas went in to try and preserve that as long as he could, until the bottom eventually caved on that one. So from a stocks perspective, there's some advantages and there's some disadvantages. I mentioned tying up capital. Right now on the screen, we're looking at Apple on a daily chart. Apple, when it closed on Friday, you see that it was at 289.03. Today, when it opens, it's going to open up at around 267. I'm sorry, yeah, it's already open. So if I switch my chart to my hourly, I believe I have pre-market on there. If I don't, I'll get it on there. So Apple is going to open up a little bit lower with pre-market, and it's going to be around 267 and change. So what does that tell us going forward? Well, because the S&P futures just tanked last night, this tells us that the opening of pretty much every stock is going to be lower. And as you can see from the chart here, it opened way down here. So if I look at that, it's around 269, and it's already fallen about $1.50. So we can learn that when the S&P futures go down overnight, stocks primarily in the S&P 500 will also go down. Not every stock will go down, but the vast majority of them. I mentioned tying up capital. Apple is about 267 and change per share. So if you want to buy 100 shares of Apple, it's going to cost you $26,700 and change. That's a lot of money to tie up. Another example would be Berkshire Hathaway. Everybody's heard of Berkshire Hathaway and how Warren Buffett has run his company. Well, on Friday, it closed at right here about $310,414 a share. Today, it opens about $20,000 lower because of what happened in the futures market last night. This is going to tie up a lot of stock. And here's the really interesting thing about Berkshire Hathaway. Warren Buffett buys stocks for the dividends. He loves getting that check. I think Coca-Cola, the last time I checked, which was years ago, he's got hundreds of millions of shares of Coca-Cola. And his dividend checks are about, they're in the hundreds of millions of dollars every quarter. But Berkshire Hathaway, his company, he will not put out a dividend. He will not pay a dividend. So this is what you would refer to as a growth stock. And by and large, Berkshire Hathaway has grown, and you can tell from the chart how much it has grown. So this is just a daily chart. If I slip this thing over to a monthly, and you can see the volatility on this thing. And if I go ahead and I'm using TradeStation, by the way, and if I change this right here to 20 years back, hopefully it won't take too long. Cool. You can see this stock from the bottom of 09, where it was 70,000. It is now 289-ish, somewhere around in there. And the movement on this thing has been great. Now it's been 11 years, and we would expect that. But this thing has tripled, quadrupled. Yeah, it's gone up over 4 times, and that's an incredible run for a stock such as this. What I'd like to show you now is diversification. We've all heard about diversification. We need to diversify, and I want to add a chart in here that will show you, and you can probably do this with any stock that you have in your portfolio. You can go ahead and let's say I want to let's look at the SPY, since that's basically the S&P 500. And if I add that stock along with Berkshire Hathaway, a lot of people say that, well, let's go ahead and let's see how this compares to the S&P 500. And as you'll notice here, we get the same type of movement on the S&P 500 that we have in Berkshire Hathaway. It bottomed out in 09. So here's the bottom. And then you can see the pattern is pretty similar to what Berkshire Hathaway is doing. You saw the big drop right here, 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 and you got the big drops correspondingly up here in Berkshire Hathaway. I can change this this stock symbol right here to Apple. So if we look at Apple, come on, Apple, AAPL, and we have the same type of pattern here. Let me get rid of some of these lines. It's just confusing. We have the same type of movement. It bottomed out, and then it made its incredible run up. You can see right here where the S&P is turning down, Apple is turning down as well. And then as it undulates and then goes up, Apple does the exact same thing. So when you're buying Apple or any other stock that's in the S&P 500, it's just going to mimic whatever SPY does. If you didn't know that, there's some information. If you did, congrats. Let's go ahead and remove SPY. And let's see if we can go ahead and find some trades. So here's what I've done on Apple. We've looked at Apple. It is going to open a lot lower. I've drawn some zones up here. This zone already was hit once. It hasn't gone through it. It's been hit again, and it worked. I don't know if it'll work a third time. My hunch is that it probably won't. So my next lower zone down here is right around in this area. And for those that may not be able to zone very well, Jose has come up with a really cool tool called UFOs. And I'll go ahead and put it on my chart here. Here's AutoUFOs. That's actually my first one. And I'll change this to a Fibonacci number. And if you're not good at drawing zones, using the tool that Jose has come up with, this can really help you zone. So AutoUFOs has come up with this as a zone from here to here. That's a lot of risk. I mean, that's $14 of risk. That's probably too much for the average investor. And that's definitely too much risk for me. But if you see the meat of this right here, from where the flying saucer is, about 313 to whatever this number is, about, let me put it right to there, to about 322. That's a $9 risk. That's much better than the $14. So whatever your risk tolerance is, you should go ahead and mark your zones accordingly. And always, always have stops. If you're going to do stocks, I would highly recommend a daily or even weekly levels. Look at those time frames and draw your zones, and then execute your trades appropriately, always using stops. Let me take UFOs off for just a second, and let's see. What am I doing? Oh, wrong one. Sorry. Take it off. Say status and close. Okay. So what I want to do now is look at a weekly level. What do the zones look like on a weekly level? Again, using stocks, you want to go ahead and invest for the long term. There are some short income opportunities that are out there, especially in the more volatile moving stocks like Apple, like Google, like Netflix, Tesla. Many of those stocks just swing wide throughout the day. And you can play those for some quick money. Just remember to always use stops. So on a weekly level, these are the zones that I came up with right here. There's a zone up there where there could be a whole bunch of unfilled orders, and there's a zone right here for some unfilled orders. I would have liked to have done this one right here. Unfortunately, it's already been used. It would have worked, but I didn't see that play. So here's one here. There could even be one in here, but I like this one better, down here. These lines right here, pay no attention to those. That's for a different strategy that I use for another type of trading. Let's just look at the stocks though. Okay, so there's Apple on a weekly. It's probably best that you wait for that particular asset to get down to that before you go ahead and execute a trade. I'm going to assume that most people know how to execute trades in the stock market, and I won't bother going over those. So let's see if there's some opportunities out there. The prices that you see over here represent the pre-market prices. The prices that you will see on the daily and weekly charts do not reflect that pre-market. The only ones that do are the ones that are less than a day. So my chart here will have the pre-market session. This one will not, the 240 minutes, because I've only got this to show the market as it opens. So if I click on here, this tells me which particular session I'm looking at, and I'm only looking at the regular session. So, and I'm okay with that. But on my 60-minute, I always have that on pre-market to see exactly what the stock is doing. So could we look at this on a 60-minute level and see if there's are any zones there? Absolutely, we could. So if I squeeze this to try to get more data in here, we can look, and I can draw a line right here, and then I can look over here to the left and see if prices hit there already, and see if I can see what I think is a zone. And what I'm looking for is some basing before a big run up. So I see this area right here. I see one here. So we have a big run up. We have some basing, and then we have another big run up, basing, before it runs up, retests, and then takes off. We had a big move down, came back to that zone, and then took off again. The orders in this particular area, excuse me, may be already filled. So that's why I'm going to look lower to see if there's any unfilled orders in this area. And then I'm going to draw a zone around orders in this area. And then any more. So we're already down to the 249s and the 248. So I'm going to go ahead and take off this this yellow line, and all that was for is to give me an idea of where the low was so far. So here's where we are, and we have some zones here and some zones here. It'd be really interesting to see what UFO would come up with. Let's see. So if I add UFOs again, and I really like this because instead of taking a minute or two to find those zones, UFOs just find them incredibly fast. Okay, so UFO liked this particular one, and then it liked, how about that? It liked the one that I marked, this one. I marked this one all the way down. UFO will just like it to there. It found one there, and it found one there, and then it found another one down here, and then one down here. And if you go down, it'll probably find a whole bunch of zones. So it really does all depend upon exactly what it is that you're comfortable with in taking the trade. my preferred method of trading stocks is to use their derivative. I love options, primarily because of the leverage. Instead of me, if I want to buy 100 shares, I don't have to come up with $26,800. All I have to do is just come up with the margin for that particular stock. So if I wanted to trade 100 shares of Apple at 260 or 261, I would have to come up with probably $500 or $600 to trade an at the money option, whether it be a call or a put, depending on if I'm buying or selling. Whenever you're buying something, yeah, you have to pay, but whenever you're selling something, you would go ahead and receive a premium. Because of the volatility that's going on in the market these past couple of weeks, the premiums for options have skyrocketed. And I think today, let's see what the VIX is doing. The VIX is probably close to the 50 range. Let's see, right now it is 41.94 is the last one. I don't know if that is, yeah, the VIX should be going up because of all that volatility that happened last night. And this is as of 3/6. Okay, today's the 9th. Let's see if I can put in the pre-market. Okay, so the VIX shot down. Interesting. Open, the high, the low. Okay, so that was there. And, oh, it's still showing the price from Friday. We'll let that go for right now. The point is that the VIX is very, very high. It hasn't been that high for a while. And the last time it was in the 40s and 50s outside of Friday was back in, I think, 2016 to 2018, somewhere in that time frame. So let's see if we can look at some other examples of stocks that we may want to look at. So if we, I have a watch list, and I want to talk to you briefly about a stock watch list. My watch list is composed of stocks that move. The only way that you're going to make money quickly or quicker in a stock is if it moves, either up or down, depending upon which way that you're going to play this. If the stock moves up and you're buying, then obviously you're going to be making money. If it moves up faster, you make the money quicker. So when you're making a play for a stock, you should have your entry point, you should have your stop, and you should have your target in mind. When you get into a trade, the psychology of the trade changes. You went from anticipation to making money to now you're making money. And when you start seeing that, quote, green on the screen, you have a tendency to want to lock in that money and move your stops up to try to minimize any losses should the trade start going the other way. The stock market breathes. It goes up, it goes down. We breathe every day. We take in air and then we exhale air. And the stock market is no different. What we don't know is the amount of breath that the stock market takes in. Sometimes it takes a huge deep breath, and then sometimes, like right now, it's exhaling a huge amount of air. So as the stock market goes down, it's breathing, and it's right now it's really breathing. The market has had an incredible run up. these past 10 years. It's basically just gone up. There's been a couple of corrections when you look at the monthlies, but nothing as severe as the correction that we are experiencing right now. Should the S&P continue to go down to the 270 level, that would be our 20% correction that the quote experts have been telling us constitutes an official correction in the stock market. We got all the way up to 340, very, very close to that. And then from there, it has tanked. And 10% of 340 is 34. You double that, that's 68. And 68 from 340 is about 272. So when the SPY is at 272, there is our 20% correction. And that will officially be in the territory of a bear market. Well, we know from the past couple of weeks that it is bearish, and it looks like there's no signs of let up. Because the volatility is so high right now, I don't know if I would be that interested in buying anything, but I would be interested in selling. And because the market is going down, I would be interested in selling calls because the premium is so high. One of the things that decide whether somebody should buy or sell in a market is the implied volatility. And right now, because the VIX is so high, which is the market's fear gauge, the implied volatility is skyrocketing. And when that skyrockets, the premiums for stock traders and option traders get very, very expensive. I know this is a session on stocks, and it has, as Jose warned earlier, I'll be kind of diverging into options just a little bit. And it's something that helps us traders. It gives us another avenue to make money. Yes, you can buy stocks, you can hold them, and over the long term, stocks have always appreciated, and that will continue to happen yesterday, today, and probably forever. There are those companies that are poorly run that will go out of business, and I've had some stocks that, you know, I bought for pennies and thought I was making a really good investment, and they just went lower. It's going to happen. And because I bought it for pennies, I didn't need to have a stop. I just figured, oh, what the heck? It's only, you know, 170 bucks. Give it a shot. And it worked for a while until it didn't. And then when the lead fell out, or the bottom fell out, and the stock basically tanked to zero, you know, I lost my investment. While I was okay with the loss, it still doesn't build up the ego. So focusing on a stock that's going to make money. If you own the stock, you're going to get paid a dividend. And the longer that you own that stock, the more dividends you get. And the more dividends you get, the more money you get. That's primarily the bottom line for owning stock. Going back to my watch list here, I've categorized all these alphabetically. That's the kind of nerd I am. And these stocks move, and they move faster than normal stocks. So if we look at a couple of these, I'd like to see if there's anything that is perhaps close to it. So here's AbbVie. There was something close by, nothing now. Here's AMD. Okay, AMD, it was in the zone on Friday, Advanced Micro. Let's see where it's going to open up today, or where it has opened up. Come on, TradeStation. Oh, here it is right here, 4280. So 4280 is way down below here. And that's not going to be good at all. Did this thing click back? What's going on? It did click back. Okay, so this thing opened at 42.80. So it's basically gone through this zone right here. And now we're in the lower zone right here. So let me drag this out. So this zone, oh, I should have taken this zone off. It already hit. So now we're in this area right here. So this stock is going to go open up about right in this area. And with the way the market's going, who knows? All we can do is just mark our zones, and then with a high degree of confidence that it'll go the direction we think it is. This particular case, we're definitely in a downtrending market. We had to go down. It came up for a few days, and now it's going to open up right here in this area. And whether it continues to go down remains to be seen. Let's move on to the next opportunity. Here's Amgen. One of the things I want to note on this is that these stocks move. So you can see from this day right here, 116. So here's January 16th from the high, when the market just tanked, to January 31st. So in the space of 2 weeks, this thing, Amgen, went from 240 all the way down to about 210. Yeah, to 210. 30 points in just a couple of weeks. That's an incredible move on a stock. So there was a lot of money that could have been made in a move like that. I still don't see anything. Let's see. I need to start updating my charts and taking some of that stuff off. Here's Boeing Airlines. Boeing has just dropped. Alibaba. Let's see. Caterpillar, or I'm sorry, Citigroup. Nothing there. There is something coming up. So this one, we're already at 54, 54.71. So it's already gone through this zone right here. So if I look at this, I may want to choose this zone right here. And if it goes down to this pivot point and doesn't go any lower, that could be a good sign right there, a good level. I would just be hesitant about buying in this market right now until we see some strength. What would be even better to do in this market is sell. So this looks like a pretty good zone. Should the market retreat to this area, because we're in kind of a downturn, and the market is breathing, sometimes it'll go down, keep going down, come back up, and then continue to go on down. And instead of selling this particular, selling this thing short, you could go ahead and buy a put or sell a call. Because the premiums are so high, I would tend to sell a call right here, collect the premium, and then see where the market takes it. If it doesn't work out, you have your stop in place. If it does work out, you made some money. Let's see. I've covered the advantages of stocks. I covered the disadvantages of stocks. The other thing is liquidity. So let's look at liquidity. So if I look at the SPY, this is the S&P 500 ETF. We can see from the volume on this thing that SPY is very liquid. And to prove that, I can go ahead and insert this indicator that will show how liquid this asset is. So here we have some daily totals right here. So on Friday, there were 228 million shares traded on this asset. On the days, usually on the days that it goes down, there are more trades. So on this particular one, it traded how many? Oh, come on. Let's just do this. So this traded about 380 million shares. That's a lot of liquidity. And one of the things that I like about SPY are the bid and ask spreads. Just like with the futures on the S&P 500 future, the bid and ask spread is usually a tick. And in this case, a tick represents the smallest amount. It would be like a penny in stocks. So on the S&P 500, we have a 25-cent tick. And on the SPY, the bid and ask spreads are very, very close. Sometimes 1 penny, sometimes 2 pennies. It's extremely close. And that means the market makers won't be making that much money, right? But they got it. But if you sell 300 million shares, then those little pennies add up. So the SPY is very, very liquid. In most stocks, what you're going to be able to want to look for is the liquidity factor. You can always get into a stock, but sometimes when you want to get out, because there's not much liquidity, you're going to have some issues. Early on in my trading career, I've purchased stocks that I thought were good. But when the play didn't work out the way I thought it was, and I wanted to get out, I had to take some bigger losses because I couldn't get out at the price point that I wanted to. There were just no takers there. So I had to cry uncle and get out at the market price, which left me with a bigger loss than I really wanted, or at least that I had planned on. So when purchasing stocks, always make sure there's liquidity to get out when you need to. And these stocks that I have in here are pretty liquid. We all know what's going on with oil, and it's probably blown through every single one of my zones that I've had here. But it's down to, what's it at? $6.65. And yeah, it's blown through this zone. It's going to blow through this zone. So my only option now is to look for a price that I think it's going to go low to and then turn around. For liquidity on USO, you can see there's 78 million shares. That's an incredible liquid fund. The average looks to be about right in here, and that looks like about 28 million a day. So you can get in and out of oil when you need to. Let me go ahead and take this off the chart so it's taken away from my chart space. So if I look at USO, and for those folks that don't want to put up with the necessary volatility, the deep breathing of the stock market, you can always do ETFs. ETFs are a basket of stocks. They swing wildly sometimes, but nowhere near as a single stock, because you have those other assets in that fund that can buffet some of that wild swing, those wild swinging actions. So here's the last time it was at 860. I don't think I'm going to find a time where it actually went below $6 where it's at right now. So there's the new low, 767. In the last, I don't know how far I've gone back. Let's see how far I've gone back. 7 years back. Go back 20 years. I'm sure we'll see something. Okay, let's see how far back I can go. Okay, so all the way back to 06, 411 of 06, I don't see anything that's below 767 about what, especially with the price that we are at today. And right now we're at, what did I say, 680, 667. So this guy is going to open up somewhere down 667, yeah, somewhere right around in here. I don't know how much lower this oil fund can go, but if you do buy USO and thinking that you're at the bottom, could it go lower? Absolutely. Have a have a 65 cents stop in there. Go from opening wherever it's at right now, and you could try it. You could buy the stock, spend $665. If you're wrong, you get out at 600. You get 600 of it back, and you move on to the next trade. You're hoping to get some money on this. If it doesn't happen, you're covered. If it does happen, great. But right now, I think what the play that I would do is I would probably sell a call because of the direction of the current market. It's bearish. And we need to be playing the markets the way that the trend is going when we're talking about stocks. I think the best thing that you can do when buying or selling stocks is to look at the trend of the S&P 500. You can look at SPY and decide for yourself which way the trend is and play it accordingly. There are going to be those times that you're going to be wrong. I'm wrong a lot. But the key to success in the trading business is to keep those losses small and let your winners run. And it's hard to let your winners run when you see that green on the screen and you're just wanting to take the profit. Keep in mind that if you do get into a trade and you're making money and the thinking that's running through your mind is you don't want to lose that money and you want to take some profit. If you're happy with the amount of money that you're making, by all means, feel comfortable and take what you can grab. But if you're going to let your winners run, then make sure you keep your stop above where you believe the breathing is going to take place, because your profit will go back. I mean, it'll eat some of your profit, that breathing. But there is the chance that it could go ahead and reverse and go the way you want it again, and you can increase your profits. I know that in my trading, I've tried to stay above that breathing, and there have been many times that it breathed more than I thought. And it took me out with a profit that I was, quote, happy with, but I was hoping that it wouldn't hit it. And then it turns right around and continues the direction that I thought it was going to go, where it could have eventually hit my first target. So just a word to the wise, make sure that you're comfortable with the profit and that you allow enough room for the breathing to happen. And just a word of advice on the breathing: look at your pivot points. So if you're in this trade right here and it's come all the way down to 665, maybe you're breathing, maybe it is you put your stop just above here because you don't believe that it's going to get back up to 10.26 before maybe it continues down to $4. So keep that in mind when you're looking at stocks and trying to decide whether or not you should get out of the trade, stay in the trade, move your stop, don't move your stop. there's so many decisions that you have to make, not only to get in a trade, but once you're in it, the psychology really changes, because the fear and the greed emotions get much stronger when you see the green on the screen. Let's see. My time is almost up here. What I want to do is kind of wrap this up by summarizing a little bit of what I've talked about. There are advantages to owning stocks. There are disadvantages to owning stocks. Make sure you have a watch list. I like to use volatility as a way of deciding whether or not to get in a stock. Put it on my watch list. I like to look at the direction of the market, that the way it's going, before I get into a stock trade. I have purchased shares before. I think one of my all-time favorites is IBM. IBM is one of those stocks that just never seems to disappoint me. It has gone from, right now, from 156 all the way down to, and I'm not sure where it's going to open up right now. Oh, here it is over here. It's going to open up at 120. So I think what I'm going to be doing is looking at IBM and to see if there is a call that I can sell somewhere in this area that'll give me enough premium to make it worth my while. If you want to short the stock, you can do that too. It's probably not a strategy that I would employ, just because of the amount of capital that's involved. That's why I like options better. But that kind of summarizes my strategy for this. I think going forward, trading stocks, if you have the capital, it's especially if you're going to be doing this from an investment perspective, you're going to do the buy and hold, get out at your target, and take your small losses. And you can be right 3 times, maybe 4 times out of 10, and you're still going to make a lot of money if you keep your losses small and you let your winners run. Let them run all the way to your target. Jose, I think I'll go ahead and turn this back over to you to see if you have any closing comments.
Yes, Jeff. Thank you so much. Actually, I am reading a question there from Carlos. Maybe you wanna before we conclude the session, we still got 1 minute, so I think you could take a look at that question from Carlos.
Okay. I don't see it. Huh.
On the chat. So if you click on on the chat, you should be able to see it.
Okay, I see it now. Let's see. Carlos. Okay, welcome to FX Street. Can you check Tesla, please? Carlos, quite challenging for retail traders to make money investing or trading blue chip stocks or their derivatives. Choosing what stocks to trade as important as how we trade them, isn't it? Oh, absolutely. When you are choosing a stock, again, you have to, in your watch list, you have to try to come up with a strategy of which stocks will you choose. So I'm going to throw out a whole universe of stocks, and there's just literally thousands of stocks out there, and I'm going to settle on a strategy. And my strategy is I need volatility. I need movement in the stock. And the more movement is, the more money that I could make. Keep your losses small and let your winners run. Derivatives I like better because of the amount of capital that I'll be investing. There's not a whole lot of capital whenever you choose options. And I never do, I'm sorry, I shouldn't say I never do. I don't do any more naked puts and I've never done naked calls, but I never do naked puts anymore. That used to be my favorite way of trading about 8 years ago. And I made a lot of money. And doing naked puts in a bull market, it is a money winner. But In a bear market or in a volatile market like this, not so much. Hope that answers your question.
Yep, wonderful. Thank you so much, Jeff. Thank you so much, everybody, for joining us today. And we are just reaching the top of the hour, so it's time to conclude the session here. See you a little later in the day. We have 2 more sessions today later on futures and options as well. So hopefully we'll see you there, or if you're watching this recorded, we will see you around as well. Thank you one more time, and a special thank you to Jeff. Thank you, Jeff.
Thank you.